If I was starting algorithmic trading completely from scratch in 2026, this is the exact roadmap I would be taking. Now, for those who don't know me, I'm Stephen Ho, founder of TheStopHunter. I've been doing this for 30 years, working for investment banks, trading companies, hedge funds, doing exactly this sort of thing. And recently and very kindly, the Society of Technical Analysts called me the algorithmic trading genius. So I'm hoping that I've got the inside knowledge for you guys if you want to pursue an avenue of algorithmic trading next year, and I can give you my experiences and the truth behind the curtain. So let's get into it. If I was starting again with no knowledge in 2026, I wouldn't begin with charts or indicators. I'd actually begin with the giants whose work built modern quantitative trading. The core three for me are still very much Ed Thorp, love his stuff, then John Kelly and Jim Simmons, because they give you that blueprint you're after. Thorp teaches edge, discovery and probability. Kelly teaches optimal position sizing and avoiding ruin, and Simmons teaches you systematization, automation and letting data drive decisions. Fabulous, maths teacher turned one of the best traders ever there. But I'd also go further. I'd study someone like Claude Shannon, the father of information theory. His work underpins everything we do in separating signal from noise. Also Benoit Mandelbrot, who proved markets are fractal, chaotic and clustered, not smooth, normal or well behaved. I'd even jump into Black, Scholes and Merton, because once you understand how volatility is priced, you understand how markets truly behave. And Robert Engle as well, his work on volatility modeling, and Andrew Lowe's adaptive markets hypothesis, blends quant psychology and evolution. And also going back to the 80s, I'd look at Richard Dennis and the Turtles, because they proved that simple rules can outperform intuition, complexity and intelligence. And these names give you the mental model for how real quants think. I can't emphasize enough how important it is to build the proper foundations before you go off, say, coding. So before you even write a line of Python code, you do need the foundations, and that's probability, market behavior, risk and adversarial thinking. I've bucketed them into those four areas in the slide there: probability, expected value, variance, fat tail, skew, autocorrelation, market behavior. Massively important. There's no point being a good coder if you don't understand how the market thoroughly 150 million% works. And for example, trend versus mean reversion, volatility, clustering, regime shifts and risk. Massively important. That's a huge thing that I've learned that really can put the edge on your side. Learning those skills just as important as getting into a trade. Stuff ideas like Kelly, fractional Kelly, risk of ruin, drawdowns. And then finally, game theory, adversarial markets, liquidity behavior, information flows. Take that gaming edge into the world. Think in terms of those ideas, and you open up a whole new spectrum of trading for yourself. So obviously you're going to need some skills. So when you've got the foundations in place, you're going to need that practical quant skill stack. And I've broken that again down into four different areas, which I think you can concentrate and pick off. First one, data science, learning stuff like clean time series, resampling, feature engineering, regime detection, exploratory data analysis, Python, a crucial skill. There are the coding languages like C#, Python, out there as a leader at the moment. Pandas, NumPy, vectorized backtesting, APIs, logging and automation, error handling, those sort of skills. Then market microstructure, order type, spread and slippage, field probability, scale and cost of execution, the real detail of how these markets work, so you can find that edge. And then machine learning, logistic regression, random forests, gradient boosting, clustering, feature importance, walk forward validation. We're trying to give you the skills, the future skills that are going to be really important as an algo trader going forward, and machine learning definitely one of those. But you don't need to be a full stack developer. You just need to be dangerous with the data, and that lot, will get you there. Whether you study it yourself, you go on part-time degree courses, local courses, YouTube channels, my channel, the stuff that I've got out there, like Python courses, it's all out there for you, waiting for you to start. Now you're going to have to become a superstar of data, and I would suggest building a clean data pipeline to start with. Pull data, clean and validate it, resample, time range, if you're using Renko, volume, compute features like volatility, returns, rolling stats, and store properly, CSV, SQLite, and automate updates. The storing very important, and you could use maybe Amazon Cloud or something like that, because you're going to need a lot of data to do this sort of stuff. But it is a skill set in itself, getting the data right. Back testing, very tricky to get right. Like I said, it's a skill set, and you can help yourself massively by building your own clean data pipeline. Remember, dirty data equals unreliable back tests, garbage in and garbage out. When you begin building your own systems, testing them, just start simple. Start with basic robust models that survive regime changes. For example, trend following, moving average, cross moving average filters. I know they're not the greatest of strategies, but it's a good place to start and learn from. Volatility breakouts, using stuff like ATR, mean reversion to moving average, Renko trend structure, if you follow my sort of stuff, options overlays as well, defined risk directional bias, volatility compression, expansion. Why simple? Because it's a good place to start. Don't overcomplicate yourself by looking for that wonderful, massively complex model straight away. It's going to be very hard to find unless you haven't got these basic skills in there. Simple models, measurable, adaptable. That's where we want to start from. Now, I briefly mentioned this earlier. Risk and trade management, they are simply a non-negotiable. You really got to learn these because they can give you an edge in themselves. If you can understand risk, manipulate and use risk to your advantage, I can tell you, you can massively improve and increase your returns and trading models. It's a skill set that you've really got to get into. Now, I've got some interesting sort of areas that you can look at. Well, I've sort of called it two sort of areas here. We got account level risk, for example, like fixed risks per trade, daily max loss, max open risk, drawdown thresholds, heat exposure limits, and trade level risk, predetermined stops, position sizing, R-based exits, time-based exits, scratch rules, never add to losers. And then we've got Kelly, one of my favorites for position sizing, like using fractional Kelly as a ceiling, never full Kelly, and it helps you sort of avoid over betting and coming out with optimal trade sizing. So risk, it's not a bolt on, it is really the system, and it's a skill that you definitely need to learn and utilize in your algorithmic trading. Everything I've shown you so far, the maths, the Python, the data pipeline, the risk management, that's all infrastructure. It's the scaffolding, the machinery, the workbench, but the part that actually makes money, the part almost no one talks about, the part you will not find in any retail trading course, is edge discovery. Most traders think the edge comes from indicators or chart patterns or the perfect parameter setting. It does not. Real edge comes from how you see the market, from your background, your creativity, and the way you connect data that other people ignore. Now, I've got some points here to go through. Domain expertise. If you spent 10 years in shipping, you understand freight flow better than chartists. If you're a builder, you understand lumber, supply, seasonality, demand cycles. If you're in agriculture, you understand crops, yields, weather risk. If you work in energy, you know refinery maintenance cycles, storage constraints and crack spreads. Alternative data. Some edges come from alternative data, the kind of information most traders never think to look at. Shipping manifests, satellite heat maps, rainfall deviation, environmental reports, Google trend anomalies, fuel switching patterns, cost of carry distortions. These data sets aren't sexy, but when combined with the right model, they become lethal. What about seasonality and supply chain? Some edges come from the mechanics behind them. Most retailers never consider where commodity actually comes from, how it gets transported, who stores it, or how weather affects supply shocks. But if you understand the bottlenecks, you understand the opportunity. What about volatility patterns? Pattern recognition there, spotting when the market is compressing, expanding, rotating, or changing regime. Volatility tells you when to trade big, when to trade small, and when to sit out entirely. Half the edge is knowing when not to trade. And what about execution edge? Some edges just come from plain out execution. The way you enter, the way you structure orders, the liquidity you target, the volatility filter you use. Execution edge is invisible, but over hundreds of trades, it's the difference between profitability and noise. And niche markets. Get into niche markets. That's one of the biggest edges. Small futures contracts, obscure spreads, thinly traded equities, seasonal commodities, places where the big money isn't looking. You don't need to beat Citadel in S&P futures. What you do need is to find a market where nobody cares and build a system that quietly extracts money from it. What about Renko, time, volatility hybrids? Sometimes your edge comes from how you transform the data. I love to use my Renko charts. Volatility, normalized bars, hybrid systems that blend brick size with time and volatility regimes. That's not something that comes from a textbook. Comes from experimentation, pattern recognition, and more thinking like a quant. And a real example that I've seen working out. I worked in a fund a while back, and sitting next to me was a doctor of weather. Modelled weather to trade nat gas. Used all sorts of stuff, satellite imagery, temperature deviation charts, airport information, humidity shifts, storage change projections, forecast models, all into a unique niche edge transformed into a tradable strategy through nat gas. Very successful, but a typical example of what you could be doing. So that's the truth about edge. It's rarely found on the screen. It's found between your ears. The way you think, the way you connect ideas, the way you study markets others overlook, in the way you merge domain expertise with data and probability. It's about smart thinking outside the box. And when you combine all that creative thinking with the quant tools, the data pipelines, the backtests, the risk frameworks, the Renko structures, the machine learning filters, that's when you develop something that 99% of retail traders, your average Joe trader, will never have. Genuine, defensible, repeatable edge. Now, back when I first started, this sort of stuff certainly wasn't around. And machine learning and doing it sensibly today, well, it can be incredibly powerful, but only after you have a working system. So it's a nice add-on once you've got the other boxes ticked. If you start with machine learning too early, you won't build a strategy. You'll just build something that looks amazing in sample and fails immediately out of sample. Machine learning is not the strategy, it's the refinement layer. And I've got some points on it to cover off, like regime classification. That's the first role of machine learning in trading. Like I said, regime classification. Markets behave differently in different volatility states, liquidity states, macro regimes and sentiment environments. Machine learning, especially clustering and simple classifiers, can help you identify those. For example, trend regimes versus mean reversion, low vol versus high vol, expansion versus compression, risk on, risk off. And when you know the regime, you know whether your strategy should be trading it. Other stuff like signals filtering. Machine learning, incredibly useful for filtering out low quality signals. Volatility clustering. Now, volatility doesn't behave randomly, it clusters. And machine learning can help detect when volatility is expanding, contracting, regime shifting, transitioning between momentum and noise. A very valuable tool to know and understand. Feature importance, a very practical machine learning use case, not prediction, just understanding which inputs matter most. Random forest, gradient boosting, and SHAP values can quickly tell you, for example, which volatility measures are useful, which momentum windows actually matter, which filters add value. It stops you building bloated strategies with unnecessary components. Then we've got probability modeling, a very useful tool. A simple logistic regression could tell you the probability that the next brick Renko closes higher, or a volatility breakout continues and mean reversion setup reverts. You're not trying to forecast here the price, you're estimating the odds, and that's back to our friends Thorp and Kelly. That sort of approach. And then we've got things like timing optimization, can refine timing, best time of days to days to execute, best time in the day, how long to hold on for when volatility is favorable, for example, anomaly detection, conditions when the market is behaving in a way your system wasn't designed for. But basically, remember, machine learning is not the strategy. It sharpens the edge you have. It improves timing, filters noise, identifies regimes, and strengthens your risk. But if you don't have a real edge to start with, machine learning will just help you overfit faster. Use it as a tool, not a crutch. Finally, once you have a validated system, proper risk management, clear edge, you automate everything as reasonably as you can. Not because bots are cool, not because automation is fashionable, but because automation removes emotional errors, enforces discipline, and gives you consistent execution that humans simply can't match. Now, some things to think about. Automated signal generation. First thing to automate is your signals. Your system should tell you when a setup appears, not your emotions, not boredom, not your desire to find a trade. They've got to be as objective, rule-based as possible. Automated position sizing. The system calculates the risk per trade, the volatility adjusted size, the stop base size instantly and consistently, no second guessing. Automated order placement. When the trade triggers, your bot sends the entry, stop, target size without hesitation, without emotion, or without deviation. Automated logs. Every trade should be automatically logged. For example, time, price, size, stop, reason, regime, volatility, state, outcome. This will give you a data set you'll use to improve your system. Risk guardrails. Then you install risk guardrails, automated rules that shut the system down if, for example, drawdown hits a certain limit, volatility spikes beyond your limit, slippage goes abnormal, the market's behaving erratically. Fail safes that are going to massively help you. Daily, weekly performance reports, your risk return, your Sharp, those sort of things. This is how you scale. This is how you behave like a CTA, even with a small account, because automation isn't about being a bot trader. It's about becoming consistent, disciplined, and data driven every single day. So you now have a 9-step roadmap for 2026 to get you going on your algo trading journey. So here it is summarized from end to end. We're going to study Thorp, Kelly, Simmons, Shannon, Mandelbrot, Engle, Lowe, Black Skulls, Dennis. We're going to learn probability, market behavior, game theory, build your data science foundation, learn Python for quant work, build a clean data pipeline, test simple models, add machine learning sensibly, build risk and trade management into the core, seek unique edge discovery, and automate everything like a CTA. It is deep, it is a lot to learn, but once you master it, the world, the trading world will definitely be your oyster. So I hope you found that an interesting sort of introduction to the world of algo trading, what it will take in 2026 to get you there, producing fabulous, profitable trading systems. That's what you need to do. 9 steps and a lot of work, a lot of time, dedication, motivation, and you will get there. I can tell you, definitely worth the effort. But you're wondering maybe where can you actually start? Well, you're in the right place.
and I've got a lot of content, a lot of resource that will help you in that journey, not just on the YouTube channel. Check out all those videos. I think there's about 750 of them now, but also on the website www.TheStopHunter.co.uk. Got a lot of courses, learning material there for you to get you started. Also, it's November 2025 now. Got some fabulous, I call them Black Friday offers out there, which will never probably be seen again at those levels. So why don't we just have a quick look through those now so you can see what you can get your hands on to get that journey started. So the TheStopHunter website, www.TheStopHunter.co.uk, that's where it all sits. And as you can see right from the home page, you're being led into a whole load of learning and discovery, particularly tailored to what you want to learn. If you're following up on this video, up the top there we've got Python for trading, Renko masterclass. But if we just scroll down on that homepage, you can actually see your trading edge journey. Now we've got some core foundation trader skills. We can see how we can build our edge, and, advance your system, automate your edge, and supporting resources. Like I said, it's all covered there, and you can find out more about who we work with, what we do, the tools we've got through those different links. But let's have a quick look at the Python for trading. I said if you're new to Python, have never done it before, then this is the course for you, because it's got 3 sections: an intro section just to get you up to speed, then we focusing on trading, and then we do add machine learning. As you can see there, got a great offer on there at the moment. It's even better for November, and we're going to quickly look at that in a moment. And then we got our Renko bot course. If you want to build a fully automated Renko bot around the charts that I love, and really use the most, the Renko stuff. Again, fabulous offer here. It's all restricted, limited to first amount of traders signing up as well. And then we've got a Renko masterclass in 2026 January coming up as well. If you've got a small account, how can you turn that into a business? You might not think that's anything to do with algorithmic trading, but we add in a lot of the elements, foundations that you need, like I said right back at the start of the video, that help you build those tools and bits and kit that you need to make your algorithmic trading a lot more successful. So a whole load of stuff there for you. Now, I mentioned the November sale. It's all there on our PayHip site. I put a link in the description below there. Some big savings, I said, on the courses. The Renko book, if you want to get into that. The Samurai Trading book. Previous masterclasses that we're running. This is the big one for November. It won't exist past the end of this month. It's the Mega Renko Trading Bundle, and it is heavily discounted, saving huge amount there. It's at $2.99. It's about £750 worth of value nearly there. And what you get, well, you get the Renko block size calculator, the Renko chart trading revolution book, the e-learning course for Python, the Renko bot building course, and a ticket to the January Renko masterclass. So it's all in there for you, and like I said, links are in the description below this. There you go. Well, I hope you've liked the video. If you have, please give us the thumbs up. It all helps the channel. Don't forget to hit the notification bell buttons. Loads more content and ideas and resource coming your way via the channel. Love to have you along for the journey. So thanks for joining me, and I hope to see you in the next video.